49.4%. Let that number sink in for a second. That is the massive CME FedWatch rate hike probability currently staring us right in the face. We are officially in a high-stakes macro shock environment right now, and that single percentage point, it's basically a gravity well for global capital.
Welcome to today's Explainer. Our mission right now is simple but critical. We need to decode the incredibly chaotic intraday movements we just saw in the Asian session and translate them into a highly actionable intelligence map for tonight's US Open. We're going to track the capital flow, isolate the supply chain transmissions, and cut right through the noise. Let's get into it.
Part 1. The KOSPI Sidecar Shock and Analyzing the Macro Catalyst. So, the KOSPI just triggered a brutal 4.5% intraday sidecar decline. Literally a forced halt in trading because the panic was so intense. But then, something completely bizarre happened. It miraculously recovered to close positive at 0.31%. It reclaimed 373 points in a single session. But here's the catch. 72.6% of listed stocks actually closed lower. So how exactly does an index turn green when practically 3/4 of the entire market is bleeding out? Well, we're going to solve this financial mystery right now with hard data.
Look at the immense external pressure currently crushing high valuation sectors. The macro metrics are just stacking up aggressively. You've got the US 10-year yield hitting 4.592%, WTI crude oil sitting at $102.95, and the MOVE Volatility Index surging over 14%. Guys, this is absolutely not a localized dip. It is a global discount rate surge, and it is squeezing the market hard.
Okay, moving to Section 2, the Samsung Liquidity Bridge. Let's do a forensic breakdown here.
You need to follow this causal chain very, very closely, because it is exactly what dictates tonight's positioning. Step 1, the catalyst. A Seoul court grants a production injunction for Samsung, and Nomura hikes their targets. Step 2, institutions immediately rush in, executing 1.4 trillion won in buying. Step 3, and this is crucial, this institutional surge creates the exact exit liquidity that foreign capital desperately needed, triggering a massive 2.26 trillion won foreign exit. And finally, step 4, the immediate redeployment of that capital. Now, here is the real paradigm shift. Samsung's rebound? It was not a broad market recovery at all. It was actually a structural, dual-function liquidity bridge. The catalyst drove the price up, sure, but foreign investors used that exact appreciation to dump 1.24 trillion won in shares. So it wasn't a buy signal. It was a highly orchestrated, highly effective exit strategy.
And we can actually prove this mathematically through counterfactuals. Just look at what happened under identical foreign selling pressure to major companies that didn't have a catalyst. They crashed violently. LG Electronics tanked 9.77%, Hyundai Mobis dropped 9.22%, Hyundai Motor fell 5.29%. They lacked that liquidity bridge, so their floors just completely collapsed. Samsung was the isolated variable here.
Let's jump to Section 3, foreign capital rotation and tracking where that money was redeployed.
Notice the extreme sector divergence going on here. While over 72% of the overall market bled, the smart money was aggressively rotating that 2.26 trillion won. This was absolutely not a panic liquidation into cash. No way. This was strategic repositioning under the immense pressure of a rate shock regime.
The capital flow was incredibly explicit, almost surgical. It rotated sharply into power infrastructure, which scooped up 62.7 billion won in net foreign buying, and heavy construction, grabbing another 67.3 billion won. They are buying heavy, defensive, real infrastructure. Why? To weather the impending macro storm, plain and simple.
Which brings us to Section 4, the 4 canary signals and our divergence map.
Canary number 1 is your top priority tonight. It's the HBM supply chain split. We tracked incredibly aggressive buying in front-end semiconductor equipment, names like Jusung Engineering up almost 30%, but conversely, we saw unyielding, heavy selling and shorting in back-end TC bonding. That's the equipment that actually attaches the chips together. For example, Hanmi Semiconductor dropped a massive 14%. You simply cannot ignore this signal. This surgical bottleneck split in HBM processing absolutely must dictate your view on U.S. semiconductor equipment stocks tonight. The distinction is a hard, unyielding line. Front-end processing is your buy target, and back-end packaging is your disposal target. Moving rapidly over to canaries 2 and 3, we are actively seeing medium-term accumulation during price suppression. Look at Samsung SDI and Fadu. They absorbed heavy net buys even as their prices dipped. Meanwhile, Canary 3 reveals a really harsh robotics valuation split. High valuation names like Rainbow Robotics just bled capital, while iRobotics surged 30% on explicitly reported earnings. It's a ruthless separation, and it's based entirely on fundamentals.
Now, Canary 4 proves that this isn't just a total blind risk-off environment. We tracked highly selective, high-risk growth asset buying in venture capital firms, specifically Murai Asset Venture and Aju IB Investment. The driver behind this? An accelerated SpaceX NASDAQ listing timeline and massive stake investments. It just goes to show, even in a rate shock, smart money is always going to fund exceptional catalyst-driven growth.
Okay, final section. Section 5. U.S. Session Validation, the pre-flight checklist. All right, here are your hard invalidation levels for tonight's open. You might want to write these down. The NASDAQ futures baseline is firmly at 29,228. If NQ breaks below this level, the pre-market signal is dead in the water. Next, the VIX threshold is 20. If we break above 20, a full risk-off transition activates and you need to suspend all sector signals. And remember, given that massive 49.4% rate hike probability we talked about earlier, you need to cap your position sizing at a 50% maximum. Absolutely crucial. Finally, let's look at the exact U.S. confirmation targets. This whole capital flow thesis only holds water tonight if these specific U.S. tickers mirror the Asian sector signals we just decoded. For power infrastructure, we need to see response confirmation from Eaton and Vertiv. For the HBM front-end semiconductor thesis, we must see directional confirmation from Applied Materials and Lam Research. And for insurance, MetLife and Chubb absolutely must react positively. I'm going to leave you with this stark reality. If the NASDAQ falls below 29,228 tonight, every single signal we just mapped out instantly becomes a stress indicator, and your sector entry is completely deferred. So the big question for tonight's open is this. Are you properly positioned to ride the capital rotation, or are you just setting yourself up to be someone else's exit liquidity? If you want to decode the Asian market close before the opening bell even rings in New York, hit that subscribe button now.